Today, we're diving into the latest numbers from a company that, literally powers our world, Cummins. And the recent earnings report, it tells a really fascinating story. A real balancing act. How do you power today's economy while trying to build the energy sources of tomorrow? It's a story of some unexpected wins and some massive bets that, well, didn't quite go as planned.
Okay, so let's just start with the big one, the headline number. For the full year 2025, Cummins brought in a massive $33.7 billion in revenue. That is a huge figure, right? It just shows you the incredible scale this company is operating at. But as big as that number is, believe me, it is just the beginning of this story.
Because here's where things get really interesting. While one part of their business was absolutely firing on all cylinders, another part, a huge gamble on the future of green energy, hit a major roadblock. We're talking about a nearly $500 million pivot. So this isn't just an earnings report, it's a high-stakes drama about where the future of energy is headed.
So let's break it down. We'll start by just looking at the overall picture for 2025. Because as soon as you look at the different parts of the business, you start to see exactly where the tension in this story comes from.
Just take a look at this chart. Their power systems and distribution segments, they're absolutely soaring, up 16 and 9%. But their bread and butter, the thing they are most known for, the engine segment, it actually went down by 7%. And that right there is the core of the story. Their traditional business is facing some headwinds, while these new opportunities are just exploding.
So what gives? Why the dip in engine sales? Well, it's actually a pretty simple story of supply and demand. The North American truck market just slowed down a bit. And, when fewer big rigs are being built, fewer engines get sold. It's what you'd call a classic cyclical downturn.
Okay, so if their biggest market was slowing down, where in the world was all that growth coming from? Well, the answer is tied to a trend that is fundamentally reshaping, everything. Yep, the answer is something that affects every single one of us. The absolute explosion in artificial intelligence and cloud computing. All of that data, all that processing power, it has to live somewhere. And that somewhere is in massive data centers. And you know what those data centers need more than anything? Uninterruptible, reliable backup power. And that's where Cummins comes in.
And hey, don't just take my word for it. The CEO, Jennifer Rumsey, pointed directly to this incredible demand for data center power as the engine behind their record sales. It's a really amazing example of how a so-called legacy company can pivot to cash in on a massive new trend.
But that is only half the story, because at the exact same time Cummins was busy powering the AI boom, it was also making this enormous bet on the green energy transition. And this is where the dream ran headfirst into reality.
Let me introduce you to Accelera. You can think of this as Cummins' moonshot division, kind of like their own internal startup, totally focused on cracking the code for zero-emissions power. And their biggest bet, it was on hydrogen.
And inside Accelera, the key piece of the puzzle was this thing called an electrolyzer. In simple terms, it's the gadget you need to make green hydrogen using just water and electricity. This technology was supposed to be a massive cornerstone of their entire future business.
And then, this happened. A $458 million loss hitting their bottom line, all of it tied directly to that big hydrogen bet. I mean, that is just a staggering number. So what on earth went wrong? Well, here's the thing. The company doesn't really see it as something going wrong. Instead, they frame it as a necessary, decisive, strategic pivot. This wasn't some accident. It was a choice, a really expensive choice. So, the CEO put it in pretty careful corporate terms. Shifts in hydrogen adoption expectations. What does that mean in plain English? It means the green hydrogen revolution they were betting on, it just wasn't happening nearly as fast as they, or frankly, anyone, had hoped. So this is how it went down. First, they looked around and saw that the market conditions were getting worse, fast. Second, they launched a full-scale review to really understand this new reality. And third, they took decisive action. They decided to stop chasing new business for electrolyzers and to restructure the whole thing to cut their losses. And here's what that decision actually looks like in dollars and cents. The biggest chunk, $210 million, was a write-down of goodwill. That's the intangible value of the business, its brand, its reputation. They also had to write off over $100 million in inventory they couldn't sell and equipment they couldn't use. A really costly move, but from their perspective, a crucial one to stop the bleeding.
So, with one foot planted firmly in the booming present and another foot pulled back from a future that's just not quite here yet, what's next for a company like Cummins?
Well, here's the kicker. Despite that massive charge, the outlook is actually surprisingly strong. The company is projecting revenue growth between 3 and 8% for 2026. So after all that drama, they're still expecting to grow. Pretty solid.
And here's their game plan for how they're going to do it. It's basically a two-pronged attack. They're betting that their traditional truck market is going to bounce back, while at the same time, they continue to ride that explosive wave of the AI and data center boom. It's the classic strategy: balance the old with the new.
So what does this all mean? Cummins has proven, without a doubt, that it can power the economy of today. But their very costly experiment with hydrogen really shines a light on the critical challenge facing any big established company. How do you invest in an uncertain future without wrecking the profitable present? It's a high-wire act for sure, and the whole world is watching to see if they can keep their balance.